Stovekraft.
Yeah, Mr. Gandhi is with us now, so let's talk to him about that performance. Mr. Gandhi, thank you for joining in. So 8% growth on the top line and a 400 basis point expansion in gross margins. So let's start with that huge margin expansion. That's not at the EBITDA level, but at the gross profit level. How was that achieved, and is that sustainable? And also on the EBITDA margin, which you've maintained at around 8%, what's the look ahead?
Yeah, there has been multiple factors that is helping us on our gross margin, while our endeavor is to be higher in the range of 35%. There has been a softening on the input cost and some new introductions which have moved to manufacturing. There are phases where we introduce products, then assemble them and manufacture them. Many of these products have started contributing meaningfully, and so it has given us an uplift on the margin, and it is very closer to our aspired margin.
Mr.
I think going forward, we will remain in this range of 35%.
Okay, 35%. Mr. Gandhi, exactly 2 months back when we spoke with you, you had said that demand overall remains very weak. Would you want to, how have things changed, if you can talk to us about that? Are things looking up?
Yeah, see, the calendar for the festivals has actually moved this year. So generally our business is more skewed towards the second and the third quarter, where more of activity happens around the festivals. And the first and the last quarter are relatively smaller. And so the demand scenario still continues to be muted. We believe that post the beginning of Onam, things should stabilize and then demand should be back to normal. But currently it is muted.
Okay. So I didn't get that. When you say demand scenario is muted, what does it mean in terms of revenue growth for the full year, both FY24 and FY25? Are we looking at single-digit growth? And what is your outlook on margins?
Our growth comes from three factors, primarily, of course, existing product category, new product introduction, and the channel expansion. We are expanding our retail. We are seeing very good traction in our retail and very, very confident about our retail model. So we are seeing very good growth there. New product introduction has given us good growth even during this soft period. And when business resumes to normalcy, that is when the festivities kick in, even our existing product growth we believe will contribute. So overall, for the whole year, we don't see any challenge on the demand side. But between this last quarter and the first quarter of every year, we see that demands are normally soft.
Okay.
Yeah, we believe that we will be able to grow in double digit, at least a double digit growth for sure.
That's double digit volume growth, or are you talking about double digit top line growth this year?
So we believe, of course, this year the cost side has been favorable to us. So all that growth we want to relate it to value growth. We believe, of course, the volume growth will be higher.
Okay, so volume growth perhaps even better. Just a quick word on the product mix. What is the target for the company as you look at overall this year? Because the small appliances, they seem to be working very well for you, and you've got a lot of growth from that side. But the cooker segment, for instance, at least this quarter was flat. So let's say by the end of FY24, what will be your targeted product mix?
These three categories contribute to the revenue of the company. The cookware, that is the pressure cooker and the non-stick cookware, we continue to grow. There has been a shift, as I said, in the sales. And on the cooktop business, both induction cooktop and gas cooktop. And the gas cooktop particularly, we grew on volume, but there is a change in the mix of the sale. And we are seeing very high growth in our appliances business. There are a lot of appliances that we have moved to manufacturing, either to which we were importing in the past. There has been a huge advantage. We also introduced some new products which are, for the segment that we operate, are very aspirational, and we have made this affordable. And we are seeing very good acceptance and traction in these products. We believe in the appliances business will continue to grow, and in the years, all these three will be at the similar level. In the past, our appliances business used to be smaller of the two. I think going forward, appliances will also contribute as much as our cookware and the cooktop business.
Sure, sure. All right. Thank you for joining in and all the best. Demand is muted, but I'm sure it'll come back in a big way given that things are improving now. We'll slip into a quick break. On the other side, our special segment, It's the Economy. Lata will catch up with V. Vaidyanathan, the MD and CEO at IDFC First Bank, to discuss the company's Q1 earnings. Stay tuned for that.